Hey, what's going on, you guys? I'd like to welcome you back to my channel. And in this video, we're going to talk about imbalances. Now, some of you may have heard the term imbalance or fair value gap or inefficiency. Now, these terms actually all mean the same thing when talking about Forex. So what exactly is an imbalance? So an imbalance is when demand exceeds supply or supply exceeds demand. Now, what exactly does that mean? It means when the market is heavily favored in one direction, meaning that if there are more buyers in the market than sellers, then the price will push price up in a rapid fashion, creating what is called an imbalance. So let's look at a couple of examples. Now, what actually creates imbalances? Order blocks. So let's look at this area here. As you can see right here, we have an order block, a bullish, bearish, bullish. So we're going to mark this up. And basically this creates what is called a level of demand. Okay. So now we have this level of demand created. And as you can see at this particular point, there were more buyers in the market than sellers because price rapidly pushed away from this level of demand. Now, when that happened, if you look at this candle here, you'll notice from here to here, there's a gap. Now, what do I mean by that? I mean, from this candle here and these candles over here, you can see that these candles have not closed this gap. So if we look at another example, let's look at this group of candles here. 1, 2, and 3. You see we have this huge bullish candle here, but we can see that this wick on the left side and this wick on the right side has closed this gap that was formed initially. There was a gap here initially, here and here. But you can see that this candle has closed that gap. Now, we can see that we have an inefficiency or imbalance in the market. And when this happens, the market will act as a magnet to come back and close this area. Now, this might not happen in a couple of hours or days. It might even happen in a week. But eventually, the market will come back to close this area. So let's look to the right just to see if the market has closed this area. Okay, look at this, you guys. We can see that this area here, the market rushed back. Okay, my drawing is a little off, but you can see the market rushed back to actually close this imbalance within the market. Let's look at some other examples. We can see in this area here, supply exceeded demand at this certain point because we have a bearish, bullish, bearish order block here, which created this supply zone. And what happened? Price rapidly pushed away from this area, creating this imbalance in the market. Now, what did price do? Price came back to test this level of demand, closing out this imbalance within the market. Okay, let's look at some other areas. We can look at this little imbalance here. As we can see, we had an order block here, which created this level of demand. Price pushed away and came back to close this imbalance within the market before actually taking off. Okay, we had another imbalance here. As you can see, price pushed away, came back to actually close this imbalance. Now, another thing I want you guys to understand is imbalances can happen on every single time frame, not just the hourly, which is what we are on now. Let's go to the daily time frame and take a look. Okay. All right, you guys, let's look at the market here. So as you can see, we have an imbalance in the market here, and here. We can see here, price attempted to come up and close this imbalance, but not quite. It came up, tested this level before it actually rapidly took off and went the other direction. But if we look at this, we can see that this level of supply was created from this order block here. Okay, we have this order block that was creating this level of supply. Let's go ahead and mark that up. Supply right here. And if we move this over, we can see we had this imbalance within the market, but we can see price rapidly came back to actually close out this imbalance within the market. Okay. We can also see that the supply was actually closed out as well. Let's look at some other examples on this particular time frame. We can see we had another imbalance here. Price came back to actually close it out. All right, you guys, let's go ahead and recap. So remember, you guys, an imbalance or a fair value gap or an inefficiency, whichever term you want to use, it happens when demand exceeds supply or supply exceeds demand. And how is this created? It's created from an order block. So when there are more buyers in the market than sellers, or vice versa, it pushes price rapidly away from an order block, creating an imbalance or an inefficiency in the market. Hey, you guys, I hope this was informative for you, and I'd like to thank you for watching.